Welcome back, everyone. Hope you had a good week this week. Before we kind of get into our question of the week and answer obvious market questions, I wanted to ask you about what we're doing in the accounts through the end of the year and what people can expect.
Yeah, thanks, Logan. So we sent out an email a few days ago just giving everybody a heads up at the end of the year. Normally, you look to do traditional rebalancing, which is a stock bond allocation, let's say 60% in stocks, 40% in bonds, and you kind of move, areas to smooth that out, right, during a given year. Well, this year we've had both stocks and bonds basically down, statistical anomaly, but still it's happened. But we're making some structural changes inside of those areas. So subtle changes inside the stock portion, and if you have fixed income or bonds, subtle changes as well. So still a rebalance, but more often than not, in this case, we're not having to shift from one to the other. Now, that said, we're trying to get this done through the end of the year. Many of you probably already seen some of these changes. No costs, no fees associated with this. But in certain instances, if you have a non-retirement account, it's a tax advantage situation to get it done before the end of the year. So that's what we're trying to do. So just a heads up, if you have further questions on that, you want to talk about specifics, happy to do so.
Okay. All right. Well, let's get into the obvious question of the week. What's going on in the markets?
Yeah, Santa's nowhere to be found just yet. Typically this time of year, seasonality is on our side, and we typically have a nice end-of-the-year market that's often called, the Santa Claus rally. But right now we've got the Grinch, and that Grinch is Jerome Powell. So basically a lot of people are confusing the action of the Fed raising 50 basis points, which was well telegraphed. The Fed's done a good job of telegraphing ahead of time what they're going to do. Markets are pricing that in. Unfortunately, what they aren't pricing in or didn't price in was the fact that he would spend 30 minutes afterwards in a conference, well-dressed, well-articulated, looking very professional and intelligent, basically telling the world that the Fed's not going to stop until people lose jobs. And I know that's a harsh way of saying it, but nobody seems to be calling him out on that. I have a variety of thoughts on that. But the reality is that the Fed has moved past looking at just the CPI, the Consumer Price Index, which is coming down. It's still elevated, make no mistake, but it's a rolling number. So obviously we have to drop off a lot of subsequent months to get that down, and we're well on our way to doing that. So the thermostat is basically saying we are getting to our objective, but the Fed has now begun focusing on the tightening in the labor market and the jobs market. And their concern is that if we continue to see a tightening in the labor market, then wage inflation will continue to creep up, meaning people will be making more money or having to be paid more to be workers, which means prices will continue to be elevated in the restaurants, in the grocery stores, basically anywhere that sells anything and has employees. Now, the problem with that, and the market doesn't like it, the problem with that is all of the inputs, everything that goes into basically a job or, a business, those prices are coming down, and they're coming down rapidly. So a lot of us, myself included, believe that if we just gave it some time, we would see all of these price points correct. But the Fed is not wanting to give it some time. They're wanting to really go after this aggressively. Whether they do it or not, interestingly enough, is yet to be determined, but they're talking that way. And they're talking that way, and because they're saying that, the market does not like that, and stocks are selling off into the end of the year, which is not a good sign when you typically have a Santa Claus rally that sets you up for a nice start of the year, something called the January effect, all these great Wall Street terms, but something called the January effect. But ultimately, if you have a sell-off going into the end of the year, that often precipitates into further selling to start the year as people and investors just basically say, forget it, I'm out, I don't want anything to do with this, and they sell their stocks.
Well, I want to key in on something you said about will the Fed actually do this action? Will they do what they're talking about? What makes you think they might not carry through with just being extremely aggressive and raising for the foreseeable future?
So 3 reasons. The first is they have zero credibility, in my mind and many others, for actually doing what they say they're going to do in perpetuity. You can go back as early as a few months back when they told us to expect a 75 basis point hike in December. We didn't get that. Now, nobody's calling them. I mean, okay, we're getting 50 basis points, and that's fine. But again, go back a few months, and that was what was articulated. We are going to we fully expect a 75-point rate cut or a hike in November and December. I mean, whatever. And so now they're not. So the credibility of what they say and how tough they talk, and virtually what happens, a year out, there is none. So that's number one. Number two, all of these input prices and potentially employment numbers are changing very quickly. They're coming down. You can observe them, anything from used car prices to commodity prices, energy prices, oil prices, gasoline prices, you name it. They're coming down. And now we're starting to see the consumer back off. Retail sales were worse than anticipated, which means businesses very quickly could be laying off people. So we might see a job market change very quickly. And I will say the third thing, whether the Fed likes to admit it or not, they're going to be facing some pretty significant political pressure as the markets, the stock market, continues to fall from outside individuals saying, hey, why are you guys doing this? This is not good for anybody. Nobody likes falling stock prices in an economy that now is turning sour, and potentially all of this resolving itself. Maybe you need to back off a little bit. For those three reasons, I think that it's entirely possible the Fed could change their tune. People call it a pivot. I actually think what they would end up doing is calling themselves successful and pretty much saying what we have sought to accomplish, we are now accomplishing, and therefore we can pause or we can wait and see or whatever it may be. The dilemma they face, however, is if they don't talk tough like they're doing now, the market could run considerably, which is great. I would like that. I think everybody would like that, except that also means that businesses could ramp up again very quickly, and we could once again see a very quick shock back on the upside of inflation. So I think that the predicament that they're in is they can't let that happen, because then we will have a problem,
right.
A runaway inflation problem. They can't let that happen, but they got to strike a balance before we fall really into the abyss. I don't know what will happen. What I do know is that right here and now, I mean, there continues to be opportunity out there. And I do believe, as difficult as this environment is, as terrible as this year has been, there's opportunity out there. And we know, historically speaking, that even if we continue to see tough times, it's when the opportunities present themselves, when markets correct, that money is made. So you have to be patient. It's frustrating. But over time, I think this will end up being a good opportunity rather than some massive warning sign that the end is near, if you will.
Gotcha. Okay. Well, is there any other updates you want to give before we kind of close this out and wish everybody a
Yes,
Merry
I
Christmas?
do. If you are local and you can tune in to the radio, 590 AM, or what is it?
96.3.
96.3 FM. Logan is sitting in for a local radio personality for 3 hours on Monday, from 3 to 6. Luckily, we'll be slow on that afternoon, or you wouldn't have been able to get away for 3 hours.
Very true.
But anyways, this is your second time doing that, right?
Yep. Mm-hmm.
So he'll be sitting in. I think he's going to call in Daniel. They're going to be talking about personal finance and financial planning and maybe some end-of-the-year stuff. So if you're local, tune in, 590 AM, 96.3 FM. Or if you want to see it online, you can just dial into WVLKAM.com. There's a little thing called Listen Live, and we'll be tuning in.
Perfect.
So
Thanks.
good luck and go get them.
Yeah, I hope you can join us. We want to wish everybody out there a Merry Christmas, a Happy Holidays as we close out this year. It's been a difficult year, but we're glad that you all have joined us and listened to these videos, and we hope that they're helpful. But everyone out there, have a great holidays.